Hello, 1 2 1 2 1 2 1 2. Hello, hello, 1 2 1 2. I hope everyone can hear me. Just give me a second here. Thank you, Handel. I hope everyone can hear me. Everything is fine. I hope everyone can hear me. Everything is fine here with the speakers, and everything is fine here with mute this one here. So everyone can hear me. Please type on Y if you are around. Please type Y. Type on Y in the chat as well, and in YouTube, just to be sure that everything is coming over here. So welcome, ladies and gentlemen, to our maybe. So welcome, ladies and gentlemen. Not the last, but the last would be next week. Our educational session with TTW-TradeFinder and Bookmap, and I am Walter, as known as TTW Trader. Yes, I will guide you through the day. Thank you, Bridge. Thank you, Bridge. I will guide you through the day here, or to the next hour, 1.5 hours, depends on if we see something here on the chart, and we should discuss a lot of questions here. Maybe we have had this week in our Discord channel as well. So simply, we released TradeFinder 3.7 today. Excuse me, on Monday. And that's really something absolutely fantastic what we did here with TradeFinder 3.7. It is a rewritten new piece of software, and we did a lot of enhancements, improvements, and not only performance improvements but enhancements in handling of all the settings here. We added 2 market volume stop signals just to filter. So I have now selected the market volume stop signal 2 for my settings here for the RTH session, which is one for the yes future. I'm watching 1000, and I'm filtering all this, hopefully all this false positive signals out of a very strong trend move here. The native stop volume line was added. I finished today an article which will find his place in the wiki, in our wiki knowledge base on TTW Trader. And yes, there's a lot of very nice settings here in TTW TradeFinder 3.7. Please, if you are new 3.7 user, TTW TradeFinder user, please update to version 3.7. Highly recommendable. And we have had some disturbing support questions. When you install a jar file for Bookmap, simply overwrite it. You can save, however, you can save the previous jar files, add-on files. This is because Bookmap is written in Java. And then simply replace the jar file. Don't rename it. Don't do anything. Simply replace. Copy and paste. That's the most safe setup for all files you will have you will add in Bookmap. Do nothing else. Simply unzip, copy and replace, and then restart Bookmap. Add it using the plugin here, the configure add-ons. Add it, and that's it. You don't need to do anything here. However, you will need to adjust 3.7 because, as I mentioned, it is rewritten, and so we lost the market volume stop signals in this case from the release 3.6 to 3.7. But it's not really a big deal. Everything is, you can use the old one, or not the old, but previous one, and then simply define or set them in the market volume stop. So let's see what's in today in trading. I did a preparation in the room, and I mentioned that the market is oversold, oversold, and that means the market should make maybe a good retracement. That means the market will find new buyers. The jobless claims are higher than expected, and that means it seems so that every bad message from the Eco News or economical news is a good message, because next week we have an important day on Wednesday. This is the last FOMC meeting this year in the US, and we will see how strong the interest rate will be. The majority of investors are expecting a rise from 2 to 4, 0.4%, 0.5, not more. And that might give the hope that the market will, first of all, based on tomorrow's data, PPI data, the inflation is going back, is retreating, and the Fed will not be very aggressive in their interest rate decision next week. And by the way, ladies and gentlemen who are listening to this broadcast and this session, we have the rollover dates now. So keep in mind, during the rollover, Friday and Monday, I'm not trading on Monday, because these are really weak, volume-based weekdays. So every signals you might have on, or you are watching, will be or can mislead you. Let me say, can be a little bit problematic because of this rollover date. Mostly the contract will start trading with a higher volume Monday, Tuesday, latest Wednesday, and in between this is a little bit too much noise. You see that as well on my I'm still with the December contract here on my screen, and you see this how to say this liquidity around the prices here. That's a typical sign when the markets or when the contracts are in the rollover week. The last traded day is the next Thursday, I think the 12th. The last traded day is December, and that means that the market and the signals and everything you have set up are really tricky to watch. I would say that the next days here. So that means Friday, maybe even Monday. Monday is the most critical part I have discovered for myself. So I'm not trading on Monday. However, just to say that we are in the rollover week, and that means some strange things can happen on the ES contract. So if you have questions, I'm here around as well in the Discord room, in our Discord room on YouTube and Discord. So let's discuss if you have still open questions, because last time some of you who are following the live streaming and discussions and educational live sessions here are or were not sure where to put their questions in. So do it I'm on YouTube currently, I'm on Twitter, and I'm on Discord. So be free to ask. If I can answer, I will do so. If not, then we will postpone the answer and find maybe another time to answer your questions. Good. Now, what happened today, and that's very typical for these days, is that the market starts selling off, and interestingly, as therefore I'm putting all these institutional levels together here, as well as my daily levels. I'm watching the high, the low, the gap, the value area high and low, yesterday's value area high and low, the pre-high and the pre-high and the pre-low. This might be quite a point of attraction for the market, and I'm posting them every day here on our room in the daily prep. I'm commenting them. It's free for you. It's free for you, and so I hope that that you utilize this really valuable information about the market, because these are really interesting levels. These are option level, daily levels, which the market is going to obey, or sometimes obey. Not every time, not every day, not every trading session, but simply keep them in mind. And therefore, what I wanted to say is the market started selling off, and right in the gap in the yesterday settlement area here, which is the 36, I think, 36, 37 here, and then lifted very nice off here of the gap area of the so the settlements area, now in the 70s. Now in the 70s, and maybe we will see a little bit more. So broke the yesterday's high. That was a good, again, a good point to go long here as well. As you will notice in the yes, if you have installed TradeFinder version 3.7, we have added variable sign sign mechanic, so you can define, just to avoid too many signals on the chart. We have added a variable part of the symbols. It's customizable in colors, and it's yes in symbols. It's customizable. Let me show you that here on the chart. For example, when you edit the symbol, then you can define a symbol which please you, and then what we have added is a variable size and text size. You can adjust it so not to get too much signals on your chart. By the way, Aram, maybe you are online on Discord and YouTube, so no one has an echo here. Hopefully, because I have switched off my speakers here as well. So I'm not. Just hopefully on my channel and YouTube and Discord here, and everyone can hear me. That would be great if that works. So, but no complaints so far, and so, I'm assuming that this is going good here with the sound and with the voice here. Okay, going good here with the sound. On YouTube, there's a big echo. On YouTube, there's a big echo. On YouTube, there's a big echo. The question's good. I don't know why the echo is on YouTube. The question's good. I don't know Stefan. Why the echo is on YouTube. I don't know Stefan. The echo is on YouTube. Stefan. The echo is on YouTube. Can you hear me now? So I really don't know. Maybe, I hope it's better, but I don't have any clue why the echo is at the moment. I hope it's getting better here, so I don't see any issues here on my side so far. Oh, okay. No, okay, good. Maybe I've did something with my software here, with my streaming software. Okay, good. Now let's focus after the first 50 minutes on the market and see what the market is giving us back. And let me tell you from my experience, from our team's experience. And if you have questions, then please go ahead. And let's make this session vivid and really helpful, educational for everyone who wants to discuss and to with me, and that would be great. So, as mentioned, the gap was closed and the market rushed up now for 40 into 72 for 30 points. So if you're focused, and by the way, I saw a very nice trade in the Discord room based off the I think it was volume stop, and as well stop run signal at based on 639.64 down. And if you have had a chance to hold the short at 64, then the most probably exit point was the gap. Gap should be always be watched and obeyed as well. Good. You see this volume market volume stop runs here on my chart, that means these are simply the market trend is strong, but if this number of market volume is exceeded, then I will get an square here drawn on my chart as well. Here at that point it was a bigger one. You see the sizes are different, 1300, but anyway, that might be a very interesting area here as well to sell the market, although it's I must warn you, it's a bit yes, dark or not, it's a bit obscure today, because you see this bands around the price here, around the best bid offer, and that's simply because the markets are now changing, or the market or whoever is going to change the rollover. Some are now on the new contract, some are not, and that's always, you will notice that in the rollover week, this kind of liquidity band here around the price here. Okay, good. Now, good. We see here some dynamic iceberg, and I don't see for myself. If I see a chance to trade, I will do the trade. I will take the trade. But based on our studies, we are in examining, we are researching on that. That was a very nice sell. It was a sell opportunity here as well, and a kind of exhaustion comes in here. Then a little bit, it's not overwhelming, I must say, but anyway, you should watch that. Now, what I would maybe see in the market right now is if the market tests or retests yesterday's high here at 62.61. We have had some nice sweeps here as well. So someone is pushing the market up. And if so, then that might be another good opportunity to buy. Let's have an overview. And you see on the heat map, in the heat map of Bookmap, that there's no significant liquidity above and below. We have liquidity at 39.72. Something is coming up at 39.80, which comes into together with an institutional line here. And a very, I would say, an important level might be the 39.90. As well, someone posted in the room 40.20, I think it was. Might be maybe a 50% correction of the market move here. Not sure, I haven't done the measurement here on this, on that. So everything is open, and don't interpret too much in this stuff here, in liquidity and what is happening right now. It's a little bit more, as I mentioned, more obscure today, because we have a lot of liquidity here around, and even the order book imbalance will do very hard to find the right direction, because it is scattered around this liquidity is scattered around the price action, the price here. This is the price, this is the best bid offer here at the current price, and you see 64, 62, 3, yes, 2 points, 2 or 3 points above and below the best bid offer. They are putting this liquidity on, and that makes the decision what the market is or will do a little bit more harder. Katz is asking, Walter, what are you setting for Market Explorer? I have following settings here. I have, no, I'm the 400, you know, I'm enabling that in the pre-session. I have disabled the market, the signal 1, because I'm not interested in to see every 400 here, although it might be good, especially when the volume is low. Then I'm trying to catch bigger signals or volume signals here. That means I have set 1000 for signal 2. You can as well set 1100, but based on the low volume we are seeing right now, I think 1000 is okay. And what I have done is the native stop run signal is 400 on my side. That's simply to get the big ones. And the sweep signal is 300 here on my side. The volume spike signal, however, I always obey this volume spike signals because they're important, is 3000. I want to see 3000 in 30 seconds trading through 8 ticks or 2 points here. 3000 in 30 seconds trading through 8 points. And the absorption is 1000. So there's a technical question, why can't I see the trace of the DID on my chart? Maybe, I'm not sure, maybe because you haven't enabled it. And look at your settings, at the hidden at the iceberg settings. We call it hidden orders. We call it hidden orders here. Simply click on edit. I have set for hidden orders 300. I don't want to see every single iceberg. You know, I'm really tired about this iceberg discussion. Sometimes it seems to me it's more a religion, an ideological discussion here about icebergs. I don't like that, but anyway, the icebergs I have set is 300. I want just to see natives, and Spartan is if you have a look at the dynamic iceberg development settings, then you should enable that, and you should see then every dynamic iceberg development if it happens with that size on your chart. So we need, or to display a dynamic iceberg development, we need 20% of 300. So a dynamic iceberg will be displayed if at least 60 contracts were traded and are indicating that there's more to come, you know. So and if they disappear, if someone cancels the orders, then you won't see anything. But anyway, just another point, show all traces must be enabled. That's what I wanted to say. Show all traces must be enabled. Yes, show all traces. You have them disabled. No, excuse me, you have enabled. You should see them then. You should see them then. Are you sure you're not? Oh yeah, you know what? You have probably clicked on aggregated data in your Rithmic connection. That's not TradeFinder. TradeFinder can't analyze this data if they are coming in as aggregated data. So please go. Are you connecting through the RTrader Pro or directly to? So you can connect to Rithmic directly or through RTrader Pro. In both cases, either direct connection. Yeah, check your aggregated data. If you're going through RTrader Pro, sometimes the RTrader is autonomous, and that means he switches on aggregated data. It must be disabled. It must be disabled because you can't see then any icebergs or DIDs. That's the main point. So the trading idea was, and that's quite remarkable, look here what happens right now. The liquidity here resisted at 73 here, and the market didn't make it down to retest this area where it broke out of this range of 62 and 63 here. and now they are adding and stacking liquidity again in 73. However, this is nothing I would like to trade at the moment. Stefan, you have no aggregated data. Do you have, yeah. Stefan, we should have a team viewer session then, because you must see them. That's not there's something wrong with your data. If you have Rithmic and if you have not activated aggregated data, then you must see the icebergs. If you have the same settings, it must be there. So maybe you can do, Stefan, you can do following: the order size, lower the order size trigger to 200. Let the dynamic iceberg development as it is, enable all traces, and then restart the TradeFinder or reactivate. Hi GG, great. Yes, I will. Yes, it is recorded on YouTube. You can have a look at YouTube as every time. So if nothing happens and I stay sound and tell not some bullshit or whatever, I will post publish the video. You know. Okay. Yeah. Okay. Good. Good, Stefan. The point is, the point is that sometimes how to say, Stefan and others here, if you are receiving Rithmic data, we don't have, every one of us here is trading. We have some differences. Maybe these differences are because the Rithmic servers are all over the world, and that might lead to a difference in the data displayed. So if I'm set 300 and I get only 299 contracts, then I don't see this iceberg either. This liquidity is gone. As I mentioned, it is an oversold situation in the market, and I was more bullish today than bearish. But let's see what the market will show us in the next minutes. One important question I would like to, no, not important. Yes, it comes again and again and again. Is not, yes, the question isn't it's in point. It's in point that some people can't use the information of TradeFinder, and I have had some direct contacts with these people, and when I look at the chart, at their chart, you know, it's, how to say, it's crowded. There are a lot of graphs, there are a lot of lines, there are a lot of numbers, there are a lot of whatever on the chart. And then because this amount, the amount of indicators is on the chart, it is very hard to come to a decision. But that's not a fault. That's not a fault of an indicator, of an add-on or whatever. It's not a fault of TradeFinder. This is simply the situation that we humans need security. We need insurance. We need to know where the market will go the next minute. And because we don't know that, no one can foreshadow, no one can forecast the future. Excuse me. We are adding constantly something on the chart, numbers and lines or whatever, in the belief that this will give us kind of security. That's simply not true, and that's not the fault of any indicator or add-on. That's simply a fault of the user, I would say, and I'm speaking about myself. I don't want to offend anyone, but I'm seeing that a lot of traders a lot of traders have many, many, many charts on, and many, many numbers, many, many symbols, whatever on their chart. The point is that our brain can't process all this information. That's not a point of a charting system. It doesn't matter whether you use Bookmap or you use a NinjaTrade or Sierra or whatever. It's simply a process bottleneck of our brain, because we see a lot of signals and then we don't know what to do. My recommendation, and I'm doing that every single day when I'm around in our room here on Discord, is keep it simple, keep it as simple as possible. I know that's something new to work with volume, to work with liquidity, to understand what is a dual auction, how what is the meaning of the bid, of ask, of market orders, of aggressors, and so on, how to put all this together. I know that for some of you that might be very new, but it's simply the time you invest in your. I'm doing this. I'm trading it for me as a profession because I'm living off trading. It's simply the time you invest in trading, and there's no indicator out there, no one, which will make you rich in few weeks. That's not possible. So sometimes they are working, but that's not the point of the indicators. It's simply because the market proves you right. So the market goes up, and then every indicator works. Every trader will tell you how good his indicator is, how good it works, but it's not the indicator, it's simply the market. And if you are lucky, you switch from one chart to another chart, from one indicator to another indicator, then you might experience some fun with them because they worked. And however, the market will not go up or down constantly. It will change, it will go sideways, and that's the point where the most accounts will be, maybe crashed, burnt, or whatever. So to say, keep it as simple as possible. I have a very clear, yes, I'm stating that in the room, trading strategy. I've defined 4 pillars for myself. First of all, what is the trend? Then I'm looking for joining the trend, or if not, then looking for pullbacks, and TradeFinder gives me the perfect signs for pullbacks. That's really remarkable how exact this market analysis tool, we call it TTW-TradeFinder for Bookmap, is and how it works. The disadvantage is that you have to wait. That's what I'm always saying, wait and be patient. That's absolutely important. So I've got another question. There's a question of, can you please look at the area I circled in blue? Yeah, that's one of the charts. I would say it's most disturbing, but Alain, okay, Alain. Then I would say, you are using SI tracker. You don't need SI tracker if you have TradeFinder. All the functions of SI tracker are included in the TTW-TradeFinder. Maybe I would say even better. This 57.2, this is a dynamic iceberg. So, Katie, it's okay. No, that's okay. Alain, that's the dynamic iceberg. You have to adjust it, and I see that on your chart. It's a little bit too much, but anyway, it's your decision. So Alain, I hope I call you Alain. I'm not sure, but anyway, I was talking about this kind of charts because you don't need this information. You can't make any money with this information on the chart. It's going to be very hard, at least. Let me say it that way. So what you see, what is circled in blue, this is a dynamic iceberg. You have to go to the TTW-TradeFinder iceberg. Let me show you what I mean here. Hidden orders. Then you have here, you are looking to the native icebergs, and what you want to see is I would recommend to go to the professional settings here, to professional, and that means you will see a symbol with meaningful information on your chart. But anyway, that's the point, ladies and gentlemen, when yeah, I just want to say I've got these questions now, not every day, but month before. What is the difference between SI tracker and TTW-TradeFinder? The TTW-TradeFinder is yes, it's a market analysis tool which includes stop runs, volume stops, icebergs, native and synthetic icebergs, and they are, I would say complete. This is really a complete package. Thank you, John. Thank you, John, for that. Okay, let's focus on trading. I would like to do a trade here if I see one. So the idea was, you see the market volume stops here, the 1,378, 1,300, 1,100. The dynamic icebergs hitting the bit here, 500, 500 sold. This volume stop was perfect here as well. I know that some of you are simply trading market volume stops or think these are good signals. They are good, but you will experience gains and you will experience some losses if you only focus on market volume stops here. You need more information. That's okay if you're an if you're an aggressive trader, that's okay. I'm an aggressive trader as well, so you will get more than often good trades based on the stop volume here, market volume stop signal. Spartan, do we need TTW Market Volume Pro? No, not necessarily. Not necessarily. The Market Volume Pro was developed at the beginning, 2 years or 3 years ago, to measure the aggressor volume. You see my chart, and in between bid and ask, we have the aggressor volume here. We have the aggressor volume. And because we started with that, by the way, with the help of the colleagues from Bookmap, but when we started with that, then we wanted to see how this aggressor volume behaves. If you want to go into detail, then I would recommend TTW Market Volume Pro, because you will see the bid and ask split it. Let me show you that what I mean. What you see here is on my chart, for example, this is based on Market Volume Pro, and you see that the ask side is leading. That means the contracts are they're buying or lifting the offer here. Green is lifting the offer, lifting the offer, lifting the offer. That means we called it lift ask and hit bid. So have a look on my chart here. Lift ask, they lifted the offer, they lifted the offer. So the buyers are in charge. Buyers are in charge here, you see. And what's totally interesting, if you have Market Volume Pro, and that I would recommend to study the market, is if you see the difference between the green line and the difference and the gap here, the difference between the green and red line here. This is a kind of exhaustion. This is a kind of over trading. So the market always tends to come to an equilibrium. That means you see the normal state of a market is when these two lines are together or are in parallel. You see this here. So here the market is in line. As soon as one of them rushes or trades higher than the other one, so in this case, let me go back here to this because it's better to that line, it's better visible. As long as green is leading and the red line is far behind, not far, but behind, and sometimes it's far behind the green line, you can bet that these lines will come together, and that means the market will take a break. The market will take a break until the market is in equilibrium, because this is a divergence here of the market between bid and ask. Bid and ask. There's a kind of exhaustion here. You see how that behaves here at that point, and then it goes slowly down and down and down. It comes to an equilibrium. So the market buy pressure, sorry, the market buy pressure slowed down, came down, goes off the power here. And now you see what happens in the price here. This is the Market Volume Pro, the TTW Market Volume Pro, only available on the Bookmap marketplace. So I would recommend, highly recommend, to have both. And if you want to study the markets, the Market Volume Pro with a function of hit bid and lift ask here will give you very nice insights, very nice and good and important insights about the market state. You see even the how to say, the speed deaccelerated here, comes down. The speed came down here. And that means you see that in the price action right now here, it's not overwhelmingly buying, it's calming down, it's coming down, and that means the market needs more buyer, need more enthusiastic buyers, which are going to lift the offer, and that means lift the price up or drive the price up. It's not time. That was here, break, maybe takes a little bit time until next buyers will come in, and then lifting the offer and pushing the prices up. So to answer your question, if you want to do very studies you will not find anywhere else, because this is simply something that only available here, then you should study, and you have the TTW Market Volume Pro. Yes, first of all, you have defined 400 and 500, and I'm not sure if you have set the filter to at least 5 minutes. I think I did it here in the channel, in the settings channel. Yes, that might be, that are for sure good, but I'm not using 500 in the main session. This is the main session right now, and you will get a lot, not a lot, but good signals. However, you should know how to trade them. And by the way, not sure if you have 3.7 installed. I see this second red circle around this squares. Please check your time and the filter size. So that's I have set 1000. Again, every instrument on the market, it doesn't matter what it is, trades with its own volume. That means for every single instrument we have times where the volume is low. Look here at my ES here. Yes, future. Now we are trading, the market volume is in average of 1,000 and we have average liquidity of 100. So at the beginning, maybe you noticed that at the beginning we have had 3, 4, 5, 6, 7,000 here in the first minutes. Then the market comes down, the inventories are cleared, and then the market trades. So that means I'm saying always that we have two kind of two parties in the trading arena, that are retailers like we are here, and then there are institutional traders or traders with big pockets, whoever. And if they enter the market, then you will see that the market volume pops up. So that the signals or lines or whatever you are watching, volume profiles, doesn't matter anymore, because they don't care about volume profile. They are simply trading their way. They are going their way. They are doing what they want to do with 105, 200, 500 and more contracts. So when you see that, then you will see how that the market volume is, yes, it's popping up. It's going up. So that means, by saying that, I found a way for myself to set the stop signals at 400 at the beginning, for the ETH before the main session, the pre-session, and 1,000, 1,100 for the RTH or for the main session. That's the difference. So Spartan, if you want, you can switch to 1,000. You should have the same signal. You will get nearly the same signals, I'm sure. We should all have the same signals if we have the same settings. They might differ in the contract size. Maybe I see here 1131. Maybe you will get 1121 or 41 or whatever, but it doesn't matter. Or maybe 35, and the other one will see 28 here. That's not really important, but anyway, we will see should have the same signals if we have the same instrument, if we have the same settings. Do I need stop and iceberg indicator to use the TradeFinder? Timo is asking, do I need stop and iceberg indicator to use the trade? I'm not sure what you mean, Timo. If you are using the SI tracker of Bookmap, no, you don't need it, because everything is built into the TradeFinder. And I would even say it is more complete in the TradeFinder. I think I found the right expression. If you have the SI tracker, so in TradeFinder, you don't need SI tracker, because all this icebergs and stop runs and more is built into the TradeFinder. It's more complete than an SI tracker. Okay, great. I mean, it doesn't matter what signal you have, so you can exchange it. That's not important, Spartan. As well as Alain is showing us, you don't need it, because you must, by the way, at the end of the day, you must ask yourself, how does this help me to make money? So you're paying a lot of money for add-ons, for whatever you have, and I recommend only look at my chart. That's everything I have. I have NinjaTrader, by the way. I have Lizard indicators, by the way, to have an overview of daily candles, of minute candles, to see the daily levels I'm posting here in the institutional level and daily levels, so the yesterday high, low, and so on. That's all I have, and I'm happy with that. Please do not overpower yourself, and that's the most important part of trading. I know that everyone is having his own view and trading, and that's okay, because there's a very complex and chaotic world, I mean trading. everyone has his own opinion. That's okay. But don't overwhelm your processor, yeah, your unit, your brain. I mean by that your brain. There are a lot of good books around how to find the freedom in trading. And it's by the way, it's not about indicators. Howard, did you tell me the other day that the inner numbers in the zone pertains to market volume pro? No, Howard. I'm not sure what you exactly mean, but what I'm telling, what I told you, what I'm telling here, the inner numbers here, the aggressor numbers, are simply the aggressor numbers. Aggressor is someone who can't wait for a price. Let it make it really simple. So therefore, they are called aggressors because they don't want to wait for a price. And we developed TTW Market Volume Pro to see and understand better what happens in between bid and ask, and how the bid side and the ask side behaves. No, the imbalance line, the imbalance line here. Look here at the imbalance line. This imbalance line points to the higher liquidity in the book. In this case, we have the imbalance line on the bid, on the ask. This is the zero line, and the imbalance line is on the ask. If you see more imbalance on ask, then the investors are expecting that the price trades towards their levels. In this case, towards their levels on ask. Therefore, the imbalance on ask. If we see, let me see if I see something here. Yeah, no, not really. Some days we see this line is going green, or at least on my chart is going green. Then we see that the investors are expecting the price on the bid, and thus they are adding liquidity on the bid side. If you want to imbalance, order book imbalances are really crucial part of in trading, even if you maybe never heard about that. And I recommend to Google and look for order book imbalances. There are some theses out there, very good theses, and they are used as well for HFT techniques and so on. So please go into the internet or Google, and you will find some PDFs about order book imbalances. Order book imbalance is simply something where someone expects the price to trade towards his liquidity, but no one can predict the future. No algo, no human being, no one. So on some days, the well-informed traders knows exactly what happens, and it's going to happen. But if something extraordinary happens in the world, then you will see how fast the price reverses, and you will see after a few minutes how they are canceling their liquidity there and reversing their positions. There are some questions here. Do you find using the market volume stops and divergences helpful? Yes, of course, absolutely. Absolutely. Market volume stops are always going hand in hand with exhaustion. I'm preparing these days an wiki article which will be posted after review in hopefully this week. All this stuff goes hand in hand with a kind of exhaustion. If there are no buyers, there might be liquidity over, above or below, doesn't matter. In this case, if there are no buyers and if there is liquidity, there's no interest to trade these prices. And you will see divergences. You will see that. I'm sure we will see here some divergence in the MV stop here, for example, here. That's a perfect one. You see that? We have had a volume stop here. Here, where my cursor is, at 73 and 3/4 here, 73.75 here. And then next retest, that's next double top, the next double top here. Technically speaking, this is the next double top is here. And you see the divergence in the volume here, in the volume, the old volume here. I'm not sure if I can't draw something. I don't believe that because I can't draw any lines here in the subchart. But anyway, you see that with it's very easy to spot here. That was the high volume traded and then divergence here. So if you're not aggressive, then wait until the market retests, and if the market retests and you are lucky that the market retests, sometimes it flushes straight down here. If the market retests, then take this trade short because of this event here. iBeams is asking how are institutional levels derived? What's the logic? I can't and I don't want to talk about that because institutional levels are algo levels. I'm receiving it from my, let me say, from my associates, and I'm not allowed to label them. I'm not allowed to sell or market them. I just put them on the chart for ES and NQ. That's all I can say. What I'm adding is simply the simple daily measurements like high, low, gap, whatever. Then you will find the right labels, iBeams, if you look at if you install them on your Bookmap chart. Institutional levels are something I can't speak about it, and I'm not allowed simply to speak about them, but they are highly reliable. I know that they has to do with options, maybe with gamma levels as well. I'm not sure, 100% sure. However, take them as they are, take them as resistance and support if the market trades into so if you see the market, if you see liquidity, if you see a volume stop and volume run and blue colored sweep, and then in the vicinity or very close to an institutional level, then take this very, very serious. You can bet your house on that this market will reverse. So that's all I can say on that, on the institutional levels here. Thank you, Alain, for this book. By the way, there are other books like other books like The Chimp Paradox from Professor Steve Peters, as well Train Mindfully by Gary Dayton. There are a lot of books out there because trading is not a rocket science, so you can learn that if you have time and if you do it professionally in weeks, but it's our brain which is limited to process all the signs, all these numbers, all this stuff on the chart, which is needless, useless, most of the time useless. How long did it take to? There's one question. How long did it take for you to become profitable? I stopped 2008 because it was nonsense. I started with different techniques, and to me, or for me, it was nonsense. I stopped it. I was in US and England and so on, and then I've learned on a trading floor of the Deutsche Bank, they are totally different approach than what I was told. And 2016, I think 14, 15, 16, I don't know, I'm not sure. I started with Bookmap and Jigsaw Trader, and it became apparent during the year after year how the market is how the market works. No one told me about the auction. This is not, it seems not to be important. And when I learned from a pit trader how the auction works and how to understand the auction, how is this reflected in the order book I have to, for example, on my chart, because I love it and I need it, then it becomes much clearer to me how the market works. And then we started to research about the mechanics behind the markets, like icebergs, stops, and so on and so on. It takes, I must be honest, it took a lot of time, of course. It took a lot of time. But you know, the point is, I've learned, I was in the Future I/O with Big Mike forum years and years and years. I'm still a member there, but I'm not using it anymore. And Big Mike had very, today I see that it was a great motto to saying, stick with your stuff, stick with what you are trading. Because a lot of traders start with something, let me say candle chart and the moving averages, or MACD or whatever. And you know what happens then? Because it's not working, then they're switching to another indicator or whatever. And then this is not working or not satisfying, because it's working and then not. You see the account is it's diminishing. It's get less and less and less and less and less and so on. And then what happens then? Then you go to the next one. So there's no constant. There's no I would even saying stubbornness in this business for a trader, because it's not an indicator, ladies and gentlemen. It is simply the knowledge about the market mechanics and how it works, and then stay with it, stay with it, stay with it. Today I'm absolutely confident, and you will see we have a big bang in 23. What we are doing here, I'm totally confident. I know what I'm doing. I don't have any fear anymore about what I'm doing, because my amygdala and my brain is trained to do so. But that's not obvious. That's not something you will learn in this trading arena, because come here and this is a broker, and then the next one chart comes on the market, and the next indicator, and the next promises, and the next webinar, and the next seminar. This is more confusing than anything else. So stay with your approach, or learn an approach which pleases you, which is yours. Find an approach with find an instrument for yourself. That's the next point. No one wants to talk or to discuss with you what is the right instrument for you. Maybe yes, maybe it's not. Maybe it's a very fast instrument like NQ, or it's a very slow instrument like ZB, ZN, ZF, or maybe shares, more stocks. Which stocks? Or maybe you are better in options. So what is your not profession, but what is the best instrument for you? That's a question. You see, this is trading is quite complex, and when I read that they can't make money using TradeFinder, that can be, of course, that's fair, that's okay, that's fine. But it is not the TradeFinder. It is simply because it is totally new view on the markets, and to learn this new view, it takes time. It's simply not possible to do that in one day. Anthony, I answered the institutional levels. No, it's not, Anthony. It's not spot gamma. No, it's not spot gamma. But anyway, you know, Anthony, we have spot gamma as no, sorry. We do not copy spot gamma, but we have all the gamma levels as well. We haven't had the time to add it to the TradeFinder, but we are working on that. So we have the idea to add cloud nodes to the TradeFinder, and because the option levels are not a big secret, it's not a secret at all, by the way. We will add it to the TradeFinder as well. So we have the technique. We know how to pull them out from the CBO data. How to pull them from CBO data, CBOE data, and it's simply a matter of time when to adding this gamma levels to TradeFinder as well. Alain, yes, that's what I'm saying. Choosing an instrument is based on the personality. That's the point. But no one, you know, I haven't found around here in this trading industry. I at least I didn't find any person who is telling me, you look very patient, so stick with treasuries, for example. No one. Everyone's telling me, oh, use this indicator, that indicator, and that platform, this platform, and that platform, and this broker, and go to the other broker, and that's really confusing. That's bullshit. That's simply bullshit. You must find your own way through this jungle. That's unavoidable. Sparta, and I think the glossary is it's already in the institution level link. I'm not sure, but it's obvious because yesterday high, yesterday low. Maybe we can add it as well. Thank you, Spartan. I don't want to be a guru, by the way, and I don't want to be one. So please be here. We are sharing a lot of knowledge, a lot of stuff we are researching, because TradeFinder was developed for ourselves, and that's the point. And we are sharing the knowledge with you, with the interested people. That's not a business where we make millions every day, by the way. So why did I draw a white line here? That was in volume area, excuse me, a market volume stop here. And sometimes the price goes a little bit beyond that point, but in this case it seems it's not coming back, and that was maybe an yesterday high. That was a retest. We have had not really. We have had a retest here, so the assumption might be that this is as well a supportive level here, but it doesn't seem to be one. Hi, Dr. Trader. Thank you. Yes, you can do that if you record every. If you record you. If you record the sessions. Yes, you can do that. I recommend you look here. If you see my screen, here, there's a gray dot. There's a gray dot here in the outer right corner, down right corner here. You see that here? Click start on recording. then you click Start Recording, and now you can adjust, or you can select what you want to record, when and what. That's the best point. That's the best recommendable. Look here, the price is coming back here. That's the best recommendable. How to say? Yes, I would recommend that to record the data, your chart or whatever you have. Excuse me, your chart, of course, and then you can replay it. You can restart Bookmap, go into the replay mode, start TradeFinder, and you will see, I think, everything on the replay chart. By the way, TTW-TradeFinder for replays is free. Someone asked before about divergences, I think it was. Now we have had this volume stop here, which is remarkable. We have had a second one, but that one was within, let me have a look here. Yeah, within the 5 minutes I have defined. Maybe I should redefine 3 minutes here. My filter is set strictly to 5 minutes. You can define 3 minutes here as well. And that was the second one here. And now it's building a divergence. It's building a divergence here. You see that? The price comes down a little bit lower than the volume stop was. And you see very nicely in the stop volume, MV stop, here, nice divergence. So I'm just alerted to see what happens right now here. The market is retesting yesterday's high. Working with graphs and lines in Bookmap is a little bit painful. By the way, I was too late, and the better line would have been here. Given that was the second, how to say, the second stop here. Let's see how this turns out here. So if you take a long here on the second volume stop here, it would have give you back few points. Really hard to say anything around this line here. We have the VWAP, POC is here. Simply waiting for the next signal. That's the best advice. Yes, that's the best advice for us traders. I know how hard it is to wait and doing nothing here. It's a little bit, yes, a nuisance that we don't have any action so far here. At least I don't see anything here. Maybe it's going down, testing, retesting the VWAP and as well institutional level here. But on the other side, I don't have anything here on my chart. So the high was, let me have a look here, 77. Yeah, 77. Let's see how this price, oh yeah, that was a very nice one here. Missed that. How the price reacts at 51, or in this area here. You see the point here with this rollover days and week is that we don't have any other information so far on the chart we can or could lean on here. Saying, okay, there's more liquidity here on the bid or on the ask. Really hard to say anything about that. And if you don't want to go blind with in trading, then the only direction or one of to helps in to find the compass. The compass here is simply the TradeFinder. I missed that one here. So we're trading around VWAP. Again, if you're not sure, I don't have any other stuff here than this tools here. What orders qualify to be put in the hidden order dome? All hidden orders, all icebergs orders are put, reflected here and displayed here in the dome. We are in the position to see, yes, to have an MbO data feed which provides us the order IDs and the information about icebergs. And that's the point where we see the dynamic hidden order plot here. These are all icebergs traded from at the time in the chart. You see there are not many here on this day, because it's a calm day. Oh yeah, we have, I've totally forgot, we have PPI numbers tomorrow. We have PPI numbers. That means inflation numbers are in or will come in tomorrow. And look here. PPI numbers, that means inflation numbers, will come in tomorrow. And that might lead that the market is simply in a kind of a waiting position. That means the market will not make many swings today, or bigger swings or big swings. Simply wait until tomorrow PPI numbers are out, because this is an indicator for the inflation. I believe last time when they was reported, we see in a day of 100 and more points. So DD trader, every native iceberg is reflected here. Every single one iceberg, yeah, two icebergs, 3, 4, 5, 10, 50, 100, and so on. Anthony is asking, DD trader. I'm trading when I have time. I'm really unfortunate right now because I don't have the time to trade. Maybe if I find time, 1 or 2 hours a day, not more, because simply I don't have the time to trade. I'm trying to trade because this is the only time where I'm focused and dismiss any emails or messages or whatever. Anthony is asking, for example, a 10 lot in the S can be considered a hidden order, and then put on the hidden order. If the 10 lots is an iceberg, that means someone wants to hide his intention. That means someone wants to hide his intention that he has got his long 10 contracts or 10 lots in this case. Then he will, let me say, most probably split the 10 lots into 5 orders with two contracts, and then this is displayed in the this will become a native. If we can see that, this will become a native iceberg, and this will be reflected or will be shown, and will here graphically shown in the dome as well in the plot. Yes. No, Anthony, everything which qualifies as an iceberg. It can, 2 contracts could be an iceberg. I took a long position at 56 here. Why did I do so? And I'm break even, so I'm not very familiar with the dome of NinjaTrader here, with a super dome. But anyway, I'm long 56. While I was talking, I was giving them a chance. Not sure if this is going to work, so maybe the market will retest 55 again or 56. Then I'm good for a break even, maybe just to cover my commission here. 1-2 ticks. Let's see how that works, if it works. What I wanted to say, I forgot my thought here. What I'm doing now, I'm trailing. I'm trailing my position here. That's one of my techniques. If the market goes my direction and I don't see any, let me say, obstacles in the way here, I'm trailing my position. I'm simply trailing my position. I'm using the ATR for trailing, and I'm fine with that. You can use your own system. I'm used to use lizard trader indicators. I'm making a little, I'm advertising them, of course, but I'm not involved in any financial relationship with them. So simply because they are my friends, I'm trailing. And if I'm lucky, then the market will trade, hopefully. At the moment, there's nothing I see here which could become issue for myself. The only point what can happen, that the market hit my stop here. I'm not familiar with I just want to, I'm not familiar with a Superdome here. I need time to learn how to take partials here. Nice one. I will explain why I took this trade here. And when the trade is finished. There's nothing on all charts I have here around myself here, where I would be alerted, okay, this is something dangerous, I should take my profits here. I mean, you know, when you are trading, you are simply, it's the only control you have to manage your risk. That's the only point you have. The only freedom you have. The only I'm using currently NinjaTrader Superdome at Trader Grinch. I'm using I could trade off Bookmap chart, but to be honest, I'm not used to. So maybe I'm too old for this new stuff. It doesn't matter. No, I'm. Let me show you. Unilang, please Google order book imbalances on the net. You will find a lot not, but you will find some interesting thesis about order book imbalances. So on Discord, guys, you should see my screen. My stop is 39.90, 39.59, 59 and 59.25, 59 and a quarter. I'm trailing now. I have the option. Yes, I have the possibility to take my trade off here. Close my trade. The other option I have is to keep my stop and hoping that the market will do a leg up, maybe into the POC higher. There's nothing on my charts right now which indicates, okay, that might be a stop. Maybe I will be stopped out here at 59.25, but that's the risk I want to take, because in a trending day I'm better off trailing and keeping my stops than simply watching for 2, 3, 4 points. That's a classical junction here. Where to trade, up or down. Again, trading is luck. If you are lucky, then you will get 20, 30, 40 points a day. If not, then you will go break even, or even maybe stopped at a certain level, and that's okay. That's what we have to take. That's our risk here. It's not. It didn't work here for but anyway, you know, I don't know how many points, but that was okay. It was a clean trade. That what counts to me. It was a clean trade. I will explain it why I took it, although it wasn't. Although based on weaker signs, I have only one market volume stop here. You see 1,564 contracts here, traded here, and you see this very nice divergence coming in here. As well, the second reason why I took the trade was the VWAP here. That was you see now what happens. That's most common for all traders. The market retraces, hit the stop, and then it goes up. But that's how it is. So don't worry about that. That's normal process of trading. If you start to learn to take this opportunity when the market starts, you know, one of my motto is I will tell you that, and I love it. If a trend becomes obvious, you are too late, and that means that comes into that's valid for everything. If a trend becomes obvious, you are too late. And if you are too late, then you will get maybe something if you're lucky, then, but not the main part of the main portion of, in this case, the move. Look, you see what happens here. Simply they're going back nicely here. But on the other side, you know, I'm totally calm. I'm totally in my own. I don't curse the market right now or whatever. It's not in my hand. I can only follow my style, my trading style. And you have to develop your own trading style. That's important. That's quite important. So, but the TradeFinder will help you to do that. And therefore, I'm just we are saying, I'm claiming, or I'm saying that TradeFinder is there to relax and trade. Unless the market shows you his hand. And in case you are poker, look here what happens. Yeah, everything was fine. The entry was perfect. The trailing was good. Everything was fine. The decision is, what is the risk? Should I put my stop here below or leave it a little bit lower? That's simply something I don't have. I'm following my rules, and that's it. So you have to develop your own rules. Some days you will see the market goes straight up. That means the market goes up, then retraces 1 point or 2 points and goes further up. And when you have a proper trailing system, you can catch 10, 20, 30 points then. That's simply impressive as it is. And I don't know if I answer the question, do you trade on the Bookmap chart or a dome? I'm trading off the dome here. I'm used to use the dome, and that's it. TradeFinder gives you the freedom to wait and to trade if you can do that. Therefore, I'm saying and I'm warning, don't spoil your chart with useless information. Ask yourself, is this information good for me to make money? That's a question you should ask yourself. If not, discard it, cancel it, whatever. And by the way, if you are focused enough, you will get more than one trade like this one here. Today it's really calm. So you see the market volume is 1,000. The average liquidity is 90.95. There's simply no interest in trading at all. And if you experience that there's no interest in trading, then do anything else. Enjoy your life, do something meaningful than sitting in front of a screen here and watching bubbles going up and down. And even if you do such nice small trades and you get more and more accustomed and you understand what you are doing. That's the most important part of the point. Therefore, TradeFinder and these techniques, this stuff here, volume stops, stop runs, and so on, absorptions, imbalances, gives you a reason to understand what the market is doing. But it takes time. I'm sorry, I can't say any more, but it takes simply time. It takes time to get into, because it's something completely different you might have learned or read or did or whatever you did in the trading arena. So, you know, the Holy Grail is you. It's not an indicator, it's not a promise, it's not a broker, it's not a charting system or whatever. The Holy Grail is always you or we. Spartan, yes, you can do so. I think Joe is streaming his charts or his chart here. Thank you, Joe, if you're around, not sure. If you can do so, yes, you don't need every single dot here. You can switch it off here. And relying simply on the signals. In the retrospect, you see how they have been were good here, really nice here at the beginning. That one, well, that was the perfect one. So you have to be focused. That was the perfect one. That was the catch of the day, 40 into 60, 70 even. With a perfect trailing opportunity here. Nothing would have taken you out here and on the way up until this sign comes up. Then you have to exit, and you did a perfect trade. You know what you're doing. You know why this is an opportunity to trade. You know when to exit. And if you are using a candle chart, you know, I'm using it too, of course, by the way. Every one of us use candle charts. You will never know when to enter, when to exit. Only if the trend is strong, then you can enter wherever you want. I don't understand what you mean, Spartan. Adjusting the minimum volume to 100. No, again, I don't get it. I saw the divergence but was not able to enter on the retest. Why not? The dots are unimportant at this event here. and that event at the retest. They are unimportant. You know the price. The price was 54.25, 54.25 or 54.55. Excuse me, 39.55, for example. That was the entry point. 55.56. Depends on. Yeah. Draw a line, and if they retest, I think this is a good entry. Yes, the settlement is the close of yesterday. Please cme.com. If the sign is at 54, for example, here, and you want to go long, then it's sometimes, yeah, it's luck to get the same price. It doesn't matter if you are taking a 55 long here. Your stop shouldn't be more than 2 or 3 points. It depends on your risk. Management. And then if you're 55, your stop should be 2 or 3 points below 55. That means 52. And then let the market go. Yes, but Trader Grinch, that's simply a personal preference, yes. You see how perfect this trade was. My trailing was a little bit too aggressive, maybe at one point lower. I would have had the chance to stay in the trade here. That's a little bit annoying, but I'm not cursing anyone. The market is as it is, and I have my style, and I'm doing my style, and I'm happy with that. I'm really, really happy. I'm totally relaxed, and you should be as well relaxed. Alain, how come you don't have Market Volume Pro up? Because Market Volume Pro is in my head. Excuse me. Because Market Volume Pro is in my head. I was the initial developer of, one of the developer of the Market Volume Pro, and I have it in my head here. So I don't need this information additional on my chart. And by the way, I can put everything here on my chart, and that's what I've trying to say. If you see that here on your chart, that's nonsense. Don't do that. Please don't do that. I mean, you can do whatever you want. You are entitled to do whatever you want. That's sure. That's really sure. But if you look at a subchart, that's rubbish. There's no meaningful information of anything which will help you to make money and to stay consistent. And the more you have, the more you will confuse your brain, your thinking organ. Please do not so. You know, Alain, if you are working with this every single day, then it's like playing a music piece, on piano, whatever. You don't need a score. Katie, I won't be around. I won't post on Monday. I will say that in the room again. I won't post on Monday because The rollover dates are always tricky. Even Tuesday is tricky. Maybe I will be around on Tuesday, and then Wednesday is FOMC day. I don't trade on FOMC days. Then it doesn't matter what happens. You know, I love my life, and I'm enjoying my life, so I don't need to stay around here every single hour of the day. I found that the rollover days are due to mixed volume. You will see that when you compare, if you compare the December contract with the March contract. You will see at a certain point, maybe starting tomorrow evening my time, tomorrow afternoon US time, and on Monday that they are nearly close in volume, the December and the March contract. So and I recommend, because that will mislead some, or can mislead or can show some strange signals. I'm simply not doing that. I'm doing something different, meaningful, whatever. Enjoying my day. I have a lot of work here around, so no need to stay and sit around on these days. We have a lot of days where we can make great trades. Hello. Yeah, I'm so busy. I tell you, no. Simply follow us and follow me and our colleagues here in the German room as well. They are great people in there. Enjoy it and learn. Take your time. There's no need to rush, at least from my point. Katie, yeah. I don't know. I'm simply sharing my view on trading, and I'm not really. I was disappointed of so many, not only people but stuff. That's it. I'm simply telling what I have experienced. Maybe it's you. Maybe you can take an advantage of it or not. It's up to you. So you are on your own. You have. You can decide what you want. You can find your own way. I'm simply telling what I think it's the best way, and don't believe in any promises which are made which are made regarding any tools or whatever. The best tools is you, or are you. Oh, I don't have simply the time to do so. I'm really, the time is my biggest issue here. And I'm happy that we are heading into the Christmas Eve time to come down a little bit. Okay, guys, ladies and gentlemen, it was great to be with you. We extended this session, this meeting today, because it was fun. I'm happy to get 2 hours of my duty here with the team and with the development. Thank you very much. Thank you, YouTubers who are watching this video here. And thank you guys in the Discord room. Always a pleasure and great. Yes, I'm enjoying to be with you here and discuss with you. So take care, and we will meet tomorrow as well. I will leave my screen on Discord, but I will close YouTube. Next week will have as well. Oh, sorry, excuse me. Tomorrow, Philip is conducting a technical session in German and in English. Please join Philip's technical session. Next Tuesday, we will have a German trading session with Bernie and Philip, and on Tuesday and Thursday, last time this year, I will be with you again here into trading. And on Friday, next Friday, I think Philip will conduct as well a technical session. So take your time and be with Philip if you want to understand how to set up TradeFinder. And I got a question this week how to set up a stock with TradeFinder. It follows always the same rules. So if you want, then be with Philip, ask him how to set up a stock, discuss with him. It is very helpful and useful to know how to set up everything with TradeFinder, even if you don't have Rithmic, or if you don't have or don't need MbO data. Thank you very much for your attendance here to be with me, and have a great day. Enjoy your life. Thank you. Bye-bye.